we haven't been under it since going all the way back to 2015. What is going on, crypto peeps? Welcome back to the Traveling Crypto. So we are seeing a nice injection of volume in the market, which is driving up the market cap and the prices of the cryptocurrencies. And Bitcoin is really remaining stagnant. It hasn't really, driven the double-digit percentage gains that we've seen in some of these altcoins. But if you look at the overall market cap, it's around 220 bills. We've increased market cap by about 17 billion in 3 to 4 days, which is amazing. I mean, we're obviously spoiled by what happened last year at the end of 2017, and we're wanting to relive that nostalgia. But it's, we should consider that for now an anomaly. We should not look to that as the norm. So, I mean, for a market that's this small, we're talking about a little less than 10% gain in market cap within 3 to 4 days, which is crazy. If NASDAQ, say, increased by 10% or the S&P increased by 10% in 3 to 4 days, that would be worldwide cover story news. I guarantee you that. So that is good for our little market here. One thing to note on here is that Tether is back at almost $1 peg. It is at 99.5 cents. And you'll see that reflected in the price of Bitcoin between Bitfinex, an exchange that uses Tether, and something like Coinbase. On Coinbase, it's 65.10. On Bitfinex, we're at 65.86. So yeah, I mean, about a $76 price difference. Now, looking at Bitcoin on the 4-hour chart, you'll see a couple of notable things. One is the 50 and the 100 EMA crossing here, as well as the fact that we are forming an ascending triangle that we have now broken above. And hopefully this resistance here of this ascending triangle, which was at around 64.50, 64.60, becomes the support. So we have a support resistance flip. So hopefully we don't go below this. And if that's the case and we continue to see volume above average volume, that could drive the price up, or we could trade sideways for a while again in this range with 64.60 now being the current support. If we take a step back and zoom out a bit, you'll see that on the daily chart, that same ascending triangle pattern, but there are a couple of interesting things on the daily chart. One is this candle that is now creeping above the resistance of this triangle has not closed yet, right? We have a few hours, a lot of hours, almost half the day left before that closes, and we have yet to see what happens. Now, if we close above that, then we can start talking about a possible bullish scenario. Another thing to remark on here is that, we've been talking about this descending triangle for the longest time, this 10-month long trend. And, we were saying that we could just break out of it trading sideways smoothly. We don't have to see a mooning, or we don't have to see a crash breaking out of this descending triangle. And that's exactly what's happening. And we're actually seeing an extremely low period of volatility for Bitcoin. But yeah, if we close above the resistance of this short-term ascending triangle, and we can hit a target of at least the 0.382 fib level, which is at 65.93, then we can look to the next target, which has been this resistance since the beginning of September at around 67.50. Now, if you're asking, why are you drawing your the top of your fib from such a low swing high at 73.67? Well, baby steps. I mean, we can't even cross above 6,500 with confidence. So yeah, you can have multiple fibs on a chart. So you can have a fib that takes, the highest point that we've ever reached, but that's not realistic. That's an anomaly. What you're looking for is sound analysis based on the most current information that you have. And for us right now, 73.67 actually to me is a long shot at this point, right? It's something that we aspire to hit in the long term. Like if we cross above 73.67 before the end of the year, I'll consider that a success. Something that we haven't done since going all the way back to August. So that's why we draw modest, or I guess more realistic targets depending on the information that we have currently. Looking at the monthly chart, here, this yellow line is the 21-day moving average. This is a 21-month moving average. This is the 7-month moving average. And I remarked on this in my last video, but we haven't gone below the 7-month moving average since the bear market that we had back in 2014. And that lasted over a year before we were back over this line, and we are now under it. The other thing is this 21 moving average. We haven't been under it since going all the way back to 2015. And we are now just bouncing right off it. So as long as we continue to keep our heads above water, above this 21-month moving average, then I think we'll be fine. Now, it's not to say that if we fall below the 21-month moving average, then, you know, all hell breaks loose. It's not like it's some trigger that's going to send the market crashing, but it is an extremely important indicator that we've only been below once. So take it for what it is. Now, obviously, we want to see this volume coming in. This is a monthly chart, so we'll give it some time, and I'll talk about volume in a second. If we take a look at the total crypto market cap, this is still on TradingView. This is the total crypto market cap and volume. You'll see a few things here. One, we are still above where we were at this exact same point last year. Yes, even this is before that, you know, the famous massive bull run that we had in end of 2017. We are above that now. So if we're going to judge the market by the total market cap, we're actually in a better place now than we were last year before we started the bull run. Now, I'm not saying that we're going to see a bull run just because we're higher than we were last year, but it definitely helps to alleviate the loss of confidence that you might have about the current state of the total market cap, right? 212 billion is not too shabby. The same exact day last year, we were at 186 billion. And I realize these numbers differ slightly from CoinMarketCap because CoinMarketCap says we're at 219 and this currently says we're at 212. But either way, the proportions are the same. So, and then looking at volume, the volume same day last year was abysmal. We were doing $4 billion of volume same time last year, and currently we're at 15. So almost 4 times as much volume as we had last year at the same exact time. So where do I think Bitcoin is going from here? Well, nobody knows. I mean, we're trading in this. Nobody expected Bitcoin to have this low of a volatility for so long, for almost 2 months. It's never happened before, right? It's just this extremely low period that nobody expected. So, I do think it's conditional. Like I said, we have to set small targets. That is the way that I would go about it. So if we can break above this resistance, if we can hit the 0.382, if we can see the accompanying volume with those breakouts and with those closes above those resistance levels, then we can make determinations about the next level and the next level. I'm not currently swing trading Bitcoin, but you could certainly justify entering at these price levels since we were in an extremely long period of low volatility. The longer that sustains, the more of a safe zone that becomes, right? And you could set a tight stop limit below, whatever it is, 6,200, with the intention of buying back in case we do end up crashing. But on to a couple of alts that we successfully swing traded. If you want access to the trade alerts, link is in the description. The trade alerts are sent out on the Discord just like this, and these are expired trade alerts, so I don't mind sharing these with you. But if you take a look at Cardano, you'll see that there was a pretty easy setup to spot. Actually, this was a long-standing descending channel, almost perfectly rectangular, and we traded the breakout of this and the close above this on the 4-hour chart and rode it all the way up until we are now seeing a retracement. And if you set a trailing stop limit using 3 commas or setting it manually, then you would have exited this trade on the retracement depending on the percentage that you set on your stop limit. Now, personally, I think these are just retracements from the market booming so fast and within a couple of days. You'll see that on a number of coins. The next one, if you look at XRP, you'll see that XRP, we traded the breakout of this ascending triangle right here. And if you look at something like the Bollinger Bands, this was, even a further point of confirmation, along with the VFI and the fact that the MACD was so flat, again indicating extremely low volatility on XRP, the same way that we saw on Bitcoin. But the Bollinger Bands were so tight you could barely see them. And then once we started getting this volume in here and we broke out of the ascending triangle, all of these indicators provided a confluence that it was a good time to enter. And that's when we entered. And again, we are now seeing a retracement, and it's consistently bouncing off this 0.618 fib level. You'll see 1, 2, 3, 4, 5, 6, 7, almost 7 candles bouncing off this 0.618 fib level, which is a good sign that, you know, if we do get some more volume, we will start to see another climb again. And I will send that alert out in the trade alerts. So sign up if you want access to that. The last one I'll go over is Bitcoin Cash. Bitcoin Cash was really interesting because it has hit this resistance level going all the way back to August 5 times, right? And I posted this on Twitter as well, but 5 times it's hit this resistance level going all the way back to August. So once something is knocking on the door so many times, it will eventually bust through once we start getting this volume in. And you'll see that every time we hit this resistance level, 1, 2, 3, 4, 5, there wasn't any, actually the 4 previous times, there wasn't any really significant volume. If you look down here, it was pretty dull. But then once we started getting this healthy green volume above the average, above the 20 period moving average of the volume, which is this orange line, we busted straight through. And we did actually send out 2 alerts on Bitcoin Cash, one at the breach of this resistance level here, but we sent one out before that, actually on the daily chart, when we saw this potential reversal with the good volume of these 2 candles here. I wanted to get into the topic of the ETFs and what that means for Bitcoin, but I will get to it in tomorrow's video because this video is probably getting too long. So I will get to this in tomorrow's video, but tomorrow's video we'll talk about how ETFs, what the ETFs did for gold when they first launched back in 03, 04, and how that could strike a similar pattern for Bitcoin. So I will get to that in my video tomorrow. Subscribe to the channel, hit that notification bell if you want to get notified every time I post a video. Sign up to the trade alerts if you want access to that. If you need help with technical analysis or one-on-one coaching of any sort with regards to trading, again, that link is also in the description. Stay safe out there. Peace.